attending today's meeting. We have our presentation from Brian and Jessica today, which I'm really looking forward to that. It's always a wonderful time. But first, we'd like to review and approve the minutes of our last audit committee meeting back in October.
I'll make a motion.
All right, since you're a second.
I'll start you on the news, so I'm writing the second already.
Actually, I think
Then I can second.
we have to do it.
Yeah, I think I can.
Yeah.
Second. Okay, then I will second it. And motion carried. All right. Next is review of the 2024 audit and draft 2024 audit financial statements by UHY.
I think before we jump
okay.
straight into that, I just want to acknowledge and thank you both for your continued service on the audit committee, and then Tony for answering the call, as well as Toyin for joining this much loved committee.
Yeah.
It's the best committee.
I don't have to sing
Right now.
an alma mater theme, right?
No,
No
but
pledge.
we do have an audit committee handshake, so.
Oh, okay. Well, glad to be here. Thank you.
So Brian, you wanna kick it off?
Yeah, so, yeah, welcome, Tony.
Thank you.
So, I was gonna say, it's boring with no new faces. And it's like, no news is good news when it comes to the auditors, so, appreciate, the time to present the results of the audit this year. So in front of you, there's two documents from us. One is the draft financial statements. The other one is just the results of the audit, presentation. And so the financial statements are in draft form right now, pending your approval. Once you're approved, we go final, and then they get filed by the 31st for the Paris, Public Authority reporting requirements. So, and this year we met at planning, and the audit was executed based on the timeline and the process and the approach that we discussed. There were no changes to that, so again, a risk-based audit allocated and our testing based on those risks. And again, very clean. Thank all management for their cooperation, and especially with some new faces to the process. It was a very productive and timely responses to all of our requests, and had good conversation, value added in terms of the MD&A and the financial statement footnotes to make sure that they're presented as they should be, in accordance with what management's intentions are, and in line with the accounting standards. With that said, on the presentation, just jumping a little bit, we just talked about the audit strategy on page 4. With that, the results of the audit, we issue, our part of it is really 2 pages. The opinion over the financial statements, which is happy to report, it's an unmodified opinion. That's the highest level of assurance you could get from the independent auditor that your financial statements prepared and the responsibility management are presented in accordance with all generally accepted accounting principles and free of material misstatement. The other report, because it's under government auditing standards, is a report over internal control over financial reporting. And that one is, if you had any significant deficiencies or material weaknesses, because of the government auditing standards, they require you to issue those in writing and to be part of that report. Happy to report you didn't have any. So it's a clean report, again, the highest level that you would like to see there. So again, it's in draft form on page 5, just a few outstanding matters, with the receipt of management rep letter prior to issuance, along with a few subsequent event procedures. But we'll take care of that. Basically, they're, early next week, and be able to issue final. So the significant, accounts, whether it's estimates or judgments or material balances, I think I'm gonna just turn to the other document and talk a few minutes about the results of operations in terms of the net position on page 10 of the financial statements, and then the statement of activities on page 11. Just high level snapshot results of, and if management wants to chime in too with any comments, feel free. But overall, the net position, you can see down at the bottom of page 10, it increased from, $19 million in the prior year to 21.2 million in the current year. While that's a decrease in unrestricted balances, it's offset by the increase in net invested in capital assets. So again, what did you do in 24, right? You continued your improvement in the Clinton Market Collective properties and your acquisition in investment in the Liberty Park properties, including 34 Hamilton. So the creation of 34 Hamilton LLC and the acquisition of the, I guess, former Greyhound bus station, if you will, so that development is obviously capitalized and it's included in both property held for investment and Liberty Park properties. So make sure those two, so you'll see those increases in the assets up above, and of course, how'd you pay for it, right? Park grant funds and the release of restricted cash. So you see the restricted cash go down and also some liquidation of investments. So that investment line of 6.4 million last year to 5.9 this year, it's actually a healthy investment return of about 10-11%, 400,000 plus. But, you withdrew some to purchase, contribute towards purchasing these acquisitions. With the restricted cash, just wanted to note, about 740,000, 735,000 of that was actually release of the old revolving loan fund. So there's a liability down under non-current liabilities in the prior year column of 735,000, and you see it's zero this year. So that was brought into income in the current year. Management had determined and corresponded with everyone that they needed to, that saying, hey, we've met the obligations of this old, nothing really new this year other than notifying them, but it's that old revolving loan fund being able to release that into net assets.
So was that capitalized by a state grant or an Empire State Development grant from long ago?
Yeah.
Most
Yes,
likely.
yes, Empire State
Yeah.
Development way back when,
Back when I used to work there,
Yeah.
we actually appropriated money and I remember doing all that.
and prior staff had correspondence with ESD. I think telephone correspondence that had indicated that the program was no longer, ESD hadn't been reporting to the federal government for many years. And they had stopped requiring us to report probably about 2020-ish.
Right,
Okay.
and we brought this to the board
Mhm.
and actually then asked ESD, we basically sent ESD a letter saying that we're gonna repurpose these monies to our corporate purposes and not keep them restricted.
Dedicated, yeah, restrictions.
And that's all we heard, so, yeah, and I know you and I corresponded a little bit on that.
Absent further communication,
Yeah.
our intent was to repurpose this to organizational mission.
Yeah, and the prior guidance from staff, based on the correspondence we had heard, was that use it in alignment with our mission,
Mhm.
which is what we're.
Okay, so it's basically general fund. Available for corporate purposes.
It's
Like restricted, unrestricted.
Yeah.
Yeah.
Yep.
Yeah.
So releasing, and so while it was restricted, it was basically deferred and recognized as a liability. But once that determination was made to release it for the general purpose, it was released and recognized as other income in the current year. The other changes, it's noteworthy that the bonds are now paid off in full, so that's good. And that was primarily related to the original Corning Preserve with the port agreement. So the assets that were acquired with that, the capitalized assets are still on the books because the agreement goes out further. The port had paid all of those payments over the years.
Mhm.
And so that's recognized as a deferred inflow of resource. And you're basically recognizing that over the time, so there's really no net impact there.
Mhm.
You're amortizing the asset, you're amortizing the deferred inflow, recognizing the rental income for that over the period, but you have an offsetting, basically a depreciation expense to match that, but the debt has been paid in full.
Okay, so back to the revolving loan, so
Sure.
is that why cash went up then? Is that most of what cash? You said it was booked to income, and then from income, then I guess it's flowing into retained earnings.
Yeah.
So I presume it's popping up in cash?
More or less.
More or less. I mean,
Along with all your other
Yes.
change in operations,
Yeah,
but
yeah.
yes, that direct release from restricted cash got moved to unrestricted.
Okay.
Yes.
Yeah, because we don't have an unrestricted cash account here, so other than cash and cash equivalent.
Correct.
Yeah, okay, yeah, that's why I just want to make sure.
Yep, yeah, absolutely.
Yeah.
And so on page 11, it's how did those net assets change? What were your revenues and expenses for the period, you know? And again, most of it's fairly comparable, consistent with the prior year. But those large transactions that we're just talking about, you know, mainly being that last line under operating revenue, fees, programs and other income. That's where that includes that 700,000+ of the other income for the release of that revolving loan fund. So that's the primary driver there. The line above it, the gain on sale of property, that's 2 properties that were sold during 2024. Related to the Palace Theater properties and I think 174 North.
I think it actually ends up being about 4 properties,
Oh,
because it's like
okay, well,
27 and a half.
They were like,
Sorry.
out of property.
Yeah, now, exactly, so technically 4 properties,
Yeah.
but in terms of your financial statement grouping line items, if you flip to page 21 real quick, note 6. You can see the listing of all the property held for investment and lease, and it relates to these, primarily these 2 dispositions, you know, that were in part of the Palace properties and the land at 174 North Pearl. But you see, while we're at that footnote, right, you see the 2 additions to both Clinton Market Collective and the 34 Hamilton, so the significant investment in the property held, in the current year, you know, using those funding sources for that. And so no longer have interest expense because the debt's paid off and, you know, bad debt expense, you know, thankful not have any, you know, you have a very significant aggressive allowance for the current loan portfolio that's on there, but no change was necessary there. In terms of operating expenses, you can see the primary decrease there is salaries and fringe benefits, and that's the vacancy of headcounts of FTEs. So again, doing a lot with what you have and you continue, and with the footnotes, there were no new accounting standards that had an impact on your financial statements. There was one new one, you know, with can't help ourselves, right, by forcing some, you know, but we've had significant ones over the past few years, you know, with related to OPEBs and pensions and leases, and this year it was really just related to compensated absence accrual. And it didn't have an impact on the way you treat yours, so there was no impact on your financial statements for that. Everything else is, you know, neutral, consistent and comparable and in line with the standards, so. You can see the capital grant funding in the current year, you know, went from 1.6 last year to just $1 million this year, but both the MD&A and the footnotes kind of highlight, you know, what that was used for. You still have projects ongoing, obviously, and they'll continue to do so. And I think the MD&A, you know, does a good job of highlighting, you know, what's outstanding, what projects you're working on and what the plan is. But from a financial statement standpoint, the required footnotes and everything else. The addition of 34 Hamilton as an entity itself, kind of like you have citywide properties and Liberty Park. It's very similar to those 2. So they're included in these financial statements. They'll also be included in the 990 informational return with the IRS, consistent with those 2. That was new this year. But outside of that, again, pretty no news is good news kind of year, which was nice. Any questions with the operating results or the audit in general?
I do not.
No, I have no questions.
Looks fairly like things calmed down a little bit this year.
A little bit, and I would say, yeah, every once in a while.
Yeah.
financial statements, not necessarily from
It's a good thing.
a operational
Financial.
perspective.
Yeah, okay. Well, there was just a lot of changes.
Yeah.
Gap, and then there was
Right.
just a
Yeah,
lot of things that were
yeah.
done.
And Clinton
Yeah.
market expenditures to get to construction completion was aggressive in terms of, monies going out and grants received in, so, sort of that would be why many of those are lower this year, the project's done.
And so let's just, can we just say a few words about unearned grant and other income? Just to make sure we have a good understanding of that. But it looks like it's about the same, it's. Anything noteworthy there, I guess, is really more the question. Like, I know Empire State's been taking forever to pay us back for different grants. Is that what's in that number? ESD or?
I wouldn't say that for our specific project. We've heard that from other projects at different public
I
meetings,
mean, that
but
should be a receivable. Right,
for Clinton Market, we have our grant development agreement. I think Andy will be returning that back to ESD this week. That will proceed through their process, so we would anticipate being able to then move to the reimbursement process on that.
Okay.
So that's for the ESD, $750,000. And then as far as for Department of State, we have all of our grants, reporting and reimbursements in. We have our final report in, and we're just waiting on the remaining balance of the Department of State grant.
Okay, so should that, what we're talking about be showing up as a receivable? Or is it coming in as a
So, yeah.
liability?
Right,
That's what
right.
I'm trying to get at.
No, so what the unearned grant income represents is if you've already received the cash,
Yeah,
but you have conditions attached
Yeah.
to it that haven't been approved yet or
Yeah.
haven't effectively been spent, meaning that
yeah, you owe that.
more or less, we're giving this money back if we
Yeah.
don't utilize it.
Got it.
And so that has a pretty direct relation to restricted cash.
Yeah.
But which is primarily that ESD fund, so
Mhm.
yes, now, the opposite is true. If we are working on a grant, we've incurred the expenses, we've
Mhm.
done everything we need to do,
Mhm,
except for they haven't paid us yet.
mhm.
Sometimes there's a delay with approvals and you don't wanna recognize the revenue yet because you
Mhm.
haven't dotted your i's and crossed your t's. But if you had dotted your i's, crossed your t's, asked for the money back, and you felt you earned the revenue, then it would be a receivable.
Mhm.
Meaning they haven't given us the money, but they need to.
So
But
if
this
we-
is the opposite.
If we added restricted cash with unearned grant, is that kind of our total pipeline of grant funding that's kind of, either they paid it in advance and we owe them delivery of services, or we've done the services and we're awaiting the money? Is that kind of fair to just get a measure of grant flow through the organization? Or what's, I should
Yeah,
say,
how
just
to
a
look at
snapshot,
that, so
it's a snapshot of that flow.
in a primary way, the restricted cash.
Yeah.
Is along with some unrestricted cash, but that is your deferred revenue. So
Mhm.
it's one and the same, they offset each other, but that is, yes, your pipeline in terms of funds already received.
Mhm.
That you need to spend according to the grant term.
Right.
Now, what's not on there
Mhm.
is basically you've been awarded something,
Uh-huh,
but you haven't done anything, you haven't done the project.
yeah,
And you haven't drawn down the project, so that's not represented there, that's more in the MD&A and
Okay.
other footnotes saying, hey, we got these awards, but there's
Okay.
nothing on your financial statements yet, because you haven't done anything to earn them, to recognize them in any way.
okay.
So I think a good example of that for this year is Liberty Park expenses. Each year, I think we expend all of the monies on Liberty Park things, but we haven't prepared 2024's reimbursement packet. It's close, but it's not final and not submitted yet. So those are not, I don't believe, represented here because we're not entitled to it as far as eligibility or anything yet,
Okay.
because we haven't passed their
Yeah.
review.
And that, on page 23, talking about the Liberty Park properties and, the 2019 was a award of up to 15 million under the
Mhm.
Upstate Revitalization Initiative. I think a lot of that hasn't happened yet, a lot of it has.
Mhm.
And you've spent a lot, but I think you still have some level of project to go there or availability,
Yeah.
cause I think it's if anything, you spent half or so under that
So-
award.
There's more than, there's probably close to 10 million that's been expended on the Liberty Park award through various purchases and operating expenses. There's 3.5 million that is yet to receive a full ESD board approval, but we did receive that additional, not really additional, it's part of the 15.
Mhm.
But we originally received 10.139 million. In 2024, ESD approved a release of the additional 1.2 million that's part of that.
Mhm.
And we went through the grants development process that went to the Public Accountability Board and ESD Board, and public hearing. And we're just awaiting our final, packet for that, to
Okay.
get that moved over to the Imprest account. That's the plan.
And how much is that?
That's 1.2.
1.2,
And
right?
that, now where is that and is that in?
That's what we were saying.
Oh,
That's
that
not
would be
there.
in the notes. That would be floating.
Exactly,
Yeah.
you know, so that one we haven't received because we haven't spent it, so it's not there.
Got it.
But the 1.8, I think there's about 1.8 that you have received, it's in the
Yeah.
Imprest account. But we also haven't spent that yet, haven't recorded expenditures or claimed
Yeah.
to
Right.
spend it, so that's in the deferred.
So if I were to take in 2023 and add the unearned grant of about 3 million.
Yeah.
With the 3 million of the restricted cash, we'd be looking at about 6 million.
Yeah, don't
Right.
add it, it's one and the same for the most part.
Oh, it is?
Yeah, it's like, so we have the cash, but we haven't earned it yet, so we're recognizing the liability instead of net
okay.
assets.
Oh, okay, got it.
Yeah.
So it is one and the same. Okay, I was thinking there were two different ways the state would fund us. Sometimes they'd give us the money up front. Sometimes we would do the work and they would owe us the money.
So that when they owe you the money, that's the grant receivable, which is you got about 387,000 in grant
Oh,
receivable.
okay,
So you've done the work, you're just waiting to
Okay.
receive the funds back.
okay.
So that 300 plus the unearned of 2.4, that's basically funding, you know, for what you spent or what you will spend.
What you will spend.
The 2.4
Yeah,
is what
so-
you will spend, the 300 is you already spent it, but you want your cash back,
Right,
basically.
so it's 2.8 that I'm trying to get a measure of flow.
Yep.
Right, of what do we got in the pipeline cause here's my concern,
Sure.
we got cuts coming down the
Yeah,
road.
yes.
We've gotta get ready, we've
Yeah.
gotta be prepared to navigate through this
Mhm.
time, and I'm just trying to get a
And that's,
sense.
right, so now we need to connect the dots to what Ash is talking about, what is out there and available, but nowhere in
Yeah.
these figures.
Okay,
Because we've been awarded something,
yeah,
but we haven't received it or incurred cost against it, so it's not recognized from a gap perspective of financial.
okay, and that is on page 23.
For Liberty Park
For Liberty Park,
properties.
yeah. Okay. So probably worth the board, just if anybody has an interest to read through Liberty Park, just to stay up to date. And there's people there, so, okay, great, thank you. All right, any other questions? My badgering?
No, the one extra thing I'll add that we're working with management on is just that sort of timely, because we're talking about the funding and closing down some of these, but with Clinton, market, capital project, ESD is requiring, they overkilled, but they're looking for independent auditor assurance or CPA firm. Agreed upon procedures and a letter to them from the independent auditor, with specific steps related to the Clinton market. Which is really just referencing since the time of the approval, which was in November 21st, I want to say of 24. Saying, okay, from then until now, there's been no defaults on, debt or bankruptcy and it's like, oh. The answer is, of course not, there's not, but anytime you go through the official language of the letter, it's an attest engagement and
Mhm.
documentation and formal letters, and so we're just getting that through the pipeline, but by then of next week, we should be good to go there.
Will it be a separate engagement? to that?
Yes, yes,
A little more paperwork there.
yeah.
Yeah.
Are you aware, is that a newer requirement? Because we haven't.
I think it's
Done it.
theoretically, I think it's grant to grant
Mhm.
dependent, on what they wanna see. Sometimes they have further requirements of us performing actual procedures over the expenditures specific to compliance
Mhm.
with the grant terms. Other times, they said, I think they knew what this was for, they had that and it was already approved, but they were
Yeah.
just looking for this attestation related to, the debt covenants violations, and it's like, well, you guys don't have any debt, it's all paid off, and you haven't declared bankruptcy since the time they approved this, so it's pretty straightforward, but it's like, well, you really need to go through this process, okay, we will.
Okay. Well, that's great. I think do we need a motion to advance it to the board?
Yeah, positive recommendation would be what we were
Is there
seeking.
anything else on your report? You're done. Is that- I just-
Yeah,
before
I
I-
think it's covered.
before I talk, I didn't wanna-
Go ahead. Go ahead.
So the audit committee's charged with accepting and approving the
Mhm.
financials.
Mhm. And then we'll,
Accepting the audit, and then
On
we let the
behalf.
board know that.
okay,
So we will actually take the
Okay.
action. the audit
so let's
committee.
take a motion to accept and approve.
I will move.
Okay, motion carried. We will recommend to the board, or we will
You'll
report to the board
Really, that.
what our decision.
Approve the financials and you've accepted the audit. You don't get to approve the audit. The
Yeah.
audit is what the audit is.
Yeah, yeah.
Yes, yeah, you accept the audit.
Yeah.
Yes.
Okay,
Mhm.
good, well, thank you. Now, let's see, I think now we're go to New York State reporting. This is fun.
Yay.
Andy has been hazed
Yeah,
into
Andy,
Paris.
you wanna, you know?
Yeah, I've developed
PhD program.
a belated proficiency
You violated,
in this
stepped into this one.
anachronistic online platform.
Aw,
Uh,
add it to your resume.
Unforgiving.
It's our opportunity to stand out among all the LDCs, right?
Yep.
And we will do
How I
so
look at it.
by timely and accurate filing.
Yeah,
Because
exactly.
there is a
Well, that's
report
the-
outstanding.
You're in the minority, probably.
Yeah, no, honestly, you read about this, I
Every
mean,
year.
different, it eventually catches up to them, and then you read about how they haven't
Yeah.
complied at all in
Mhm.
years.
Years.
It's just like, wow.
Yes.
Once you get into it, I will say it's not that bad.
Yeah,
It is a little dry reading though. Okay, so we will step you through some of the summary observations and Brian, just, I know this is your purview, but please save me from myself if I misstep. I appreciate that. And Tom, please, if there's anything to
Sure.
add.
Yeah.
And Tom. Okay, so just from a very high level, I will step through the annual report, procurement and investment reports. Certification status, just for context, this time last year, we certified on March 29th. As of the 20th, it's unsubmitted, but pending acceptance and approval, absent any additional issues, we expect this to go in as presented without issue. One note, and we did kind of a late modification to the report that isn't in your deck. The 34 Hamilton acquisition, I just wanted to speak to Brian and Jessica about how best to categorize that. I think the consensus is that it belongs in the report. So we have the disposition of the Palace properties, the 4, and then the acquisition of 34 Hamilton in October. The property schedule doesn't reflect that, but it will. And we're gonna just put a brief summary memo together just to reflect that modification. So the only difference between this and what will go to the board for review and acceptance is the addition of the
Hamilton properties, okay. We don't need to mention it to them.
Board of Directors, again, this is kind of granular, so I'll try to make this as quickly as possible. Richard Sleesman added to the 2024 report, with start date of June 25th. Financial summary, assets increased approximately 275,000 year over year. 25,025,974. This was predominantly as a result of an increase to cash and cash equivalents. Although investment did decrease nominally, we did pull from that, for the acquisition. As a result, land and non-depreciable property increased to approximately 13.5 million. In 24, our total liabilities decreased approximately 1.96. As Brian referenced, a lot of that, or some of that at least, was the result of the repositioning of the community loan fund liability from an outstanding liability to being recognized as revenue. The port bond was also retired, and I did notice the GASB was in effect after 21, but there was a kind of an adjustment to how those things were recorded late last year. So all that rolls up to about decreased liabilities of about $2 million. Important thing to note is the net assets, net position rather, ties between the audit and the parish report. So these schedules, while there may have some dissimilarities in presentation, are congruent in, at large. So again, categorically, they may be similar, but they tie to each other. 24 total net assets, approximately 21.2 million. That's an increase of 2.24 million from 23. Operating revenue for 24, an increase of about $2 million, 3.192. Big drivers there, charge for services increased from approximately 870,000 to 1.4 million. Rental and financing income increased to 508,000 from number about 285,000. And we had some other revenue modifications that resulted in the preponderance of that change. Expenses, slight increase, 81,000. That's kind of offset by, I think we referenced the decrease in labor and fringe expense from the headcount vacancy issue. Depreciation expense, noting it was eliminated in 24. Net income, 2.2 million in 24, an increase of about $460,000 from 23. Some just debt and subsidiary references. The 255,000 in port bonds were fully retired. We do have a new subsidiary added April 30th, 24, 35 up at LLC. The resulting acquisition, final acquisition of those properties will be reflected in the final version of the Paris report that occurred in October 24. Just a little bit on this.
Works.
Tom?
Oh.
Can I jump in on non-financial stuff?
Sure.
In terms of the board of directors, as you two all know from prior meetings, just pay attention to your board of director information on here, make sure that's all accurate. And we'll call attention to that to the remaining board members in the meeting in case there's anything that we need to flip as a yes or no, if anything has changed in terms of people's appointments to other boards or otherwise.
Yeah.
And then I think that's it. Are we gonna jump through? Is there more on the annual report? Or?
That was it for the annual report.
Okay, on the annual report, I would like to add, this is a great synopsis of all of the tremendous work that Cassidy and the finance team, Andy and Tom and prior staff have been doing in terms of pushing money out the door for all of the grants. In terms of like Amplify Albany in particular, I think there's only like $5,000 that's as of yet to be reimbursed for that program. So we're really trying to get caught up on just reimbursements and get people their money.
Great.
As they complete their projects and get their paperwork, all of it in and up to par. Thanks, Cassidy.
So moving on to the procurement report, fairly straightforward. In 24, we had 24 individual procurements that exceeded the $5,000 threshold. In 23, that number was 21. Investment report, no change in compliance. We are congruent with public authorities law. Nothing new to report there. Measurements. I think that's everything.
You said nothing new for the investment?
No, no changes with respect to compliance or statute.
Okay.
Whatever you're looking for.
Yeah, I think that's good, thank you. So we have a few more things to touch on, performance measurements, internal controls, charter, and report review. 64.
So the performance measurements report, this has been reviewed through governance and the board prior. So this is just getting it on, getting the final version that's been board approved on the authority's budget letterhead as this gets emailed or uploaded and submitted with our Paris reporting on an annual basis.
Great.
Controls?
And then you can do your internal controls memos, with just simple memo states that they're determined to be adequate and did not identify any deficiencies. And then the more formal actual effectiveness of our assessment of our effectiveness of our internal controls. Andy, do you want to walk through some of that?
Sure.
Very last, 70, 69 and 70.
It's orange pages.
Nothing, I think the moral of the story is nothing significant has changed in terms of the internal controls here. These are all longstanding internal controls, and it just does provide a good synopsis of all of the things that we're doing. You know, following PAAA policies, the adoption and acceptance of the Paris reports, audit committee oversight, board self-evaluation, et cetera, as listed here.
Internal controls are excellent, management is confident with the adequacy and the robustness, the efficacy of the controls. No changes year over year material, and we recommend continuing as they currently exist.
Great.
And then your charter is one of the last things in the packet, and we do an annual review of that. Staff has not recommended any changes, council has not.
Anything that mulling over?
No, I.
Really Jones in the change?
No, not
You
really.
know, it keeps me up at night.
Yeah.
I'm too new to start trouble. Give me a couple-
Too soon to start
Give
trouble.
me a couple of meetings to kind of get acclimated to take the temperature, and I don't know.
We'll catch you in October.
Thank you. More than happy to.
Okay, so then I think we'll accept the audit charter. Sounds like we have no changes.
What would we want in terms of positive recommendation, positive
Yeah,
recommendation?
those are
on
gonna be
those
positive
three?
recommendations, and then the board will authorize Andy to hit the button on Paris. Yeah,
So Paris, so 3A, B, and C. We'd be looking for an audit committee positive recommendation.
A, B, and C.
Yes, I will move.
All right.
and all this will go to the board too, right?
Yeah.
That's traditionally, so the
Yeah.
board gets a ridiculously large package. this one.
It's a lot of paper.
Yeah, it
Happy
is a
joy,
lot.
joy.
Yeah,
I'll
yeah.
second it.
All right. Thank
All in
you.
favor?
Aye.
And then we would move to, I guess do we do,
You've already, I think the measurements report, I mean, it's
Yeah.
interesting to know.
They've already
You've
been approved, though.
approved
Yeah.
it
Yeah.
In January. The management assessment of internal controls, I would say the committee would approve that.
Okay.
You're responsible under our charter basically you're responsible for the internal controls. The charter review, we would report to the board that they've reviewed it and that there are no recommended changes.
Mhm.
And that's, and then I think you have the annual report in here or something. Do we have it? I think we used to, yeah, right here. It's in the back. So that is the report that will be provided to.
To the board, yeah.
Mhm.
Yeah, from the committee.
Okay, good.
Yeah.
Well, I think any other business before we conclude? No? All right. Well, thank you, everyone. I think, great meeting. And, hopefully we can get everybody back on time. Thank you for staying, Brian, and.
Appreciate it.
I know we covered stuff that was kind of unnecessarily.
And I apologize for being funny. I'm sorry.
Well, you can see how you held us up.
It's not good. I know that. It's not good.
The call for an adjournment.
If you'd like, we can spend 5 minutes talking about the audit.
Motion to adjourn.
So moved.
All
Get
right.
that one.
All in favor?
Aye.
Yeah. I know.
Okay, thank you.
Thank
We
you.
have exceptions
I just knew they were waiting to hit the button on mute and shut up.
We mirrored this year over year. And I
Yeah,
know
we-
the policy.
I probably bring it up each year, yeah, go ahead.
What was
Because
that?
my argument would be, we don't have exceptions to the policy because